This this is what a paradigm shift looks like. When the Bitcoin ETF was approved, it unleashed a torrent of institutional capital that sent it to a new all-time high. When the Ether ETF got the green light, it legitimized the entire ecosystem of decentralized finance. These weren't just market events, they were earthquakes that permanently altered the landscape of crypto. For years, we've asked who's next? Which project has the technology, the decentralization, and the regulatory clarity to be the third crypto asset to get its own spot ETF? Well, the whispers have started, the groundwork is being laid, and the answer might just be Cardano. What's up, everyone? Welcome back to Daily Crypto Market. I'm your host, Henry, and today we are talking about what could be the single most explosive catalyst for Cardano in its entire history. We're not just talking about a partnership or a network upgrade. We're talking about a potential spot Cardano ETF, and the market is already starting to move. In just the last few days, we've seen a 26% rally, a breakout of key resistance, and analysts are already calling for $1.25. So the main question we're answering today is this rally just another pump, or is it the first tremor before the ETF earthquake hits? Here's the game plan. First, we're going to do a deep dive into what this catalyst actually is. We'll look at the reports of an SEC review and the outlook for a 2025 approval. Then we'll look at the bear case, the significant hurdles and risks that could stop this dead in its tracks. After that, we'll cover the bull case and look at the charts to see what the technicals are telling us right now. And finally, you know the drill. I'll give you my exact price prediction for Cardano, both my short-term target and my ambitious ETF-fueled moonshot target. You need to understand what's at stake here. This is huge. Let's get into it. All right, let's get straight to the heart of this. The primary catalyst today is bigger than a short-term price pump. According to a bombshell report from BitGet Academy, there is a very real possibility of a spot Cardano ETF being reviewed by the SEC with a potential approval outlook for 2025. Let's break down why this is a monumental development. A spot ETF, or exchange-traded fund, is a regulated financial product that trades on traditional stock exchanges like the NYSE or NASDAQ. It allows massive institutional investors, pension funds, and everyday people using a simple brokerage account to get direct exposure to Cardano without having to worry about self-custody, private keys, or signing up for a crypto exchange. It is the ultimate bridge between traditional finance and the crypto world. We saw what it did for Bitcoin and Ethereum. It was like opening the floodgates to trillions of dollars in new capital. The BitGet article states, and I'm quoting here, that the potential approval of a spot Cardano ETF by the SEC in 2025 is a topic of significant interest. It highlights that Grayscale, a major digital asset manager, already has a Cardano trust. The conversion of Grayscale's Bitcoin trust into a spot ETF was a key trigger for its approval. This sets a direct precedent. The logic is, if Grayscale can convert its Bitcoin product, why not its Cardano product down the line? The implications are staggering. An ETF would bestow an incredible seal of legitimacy on Cardano. It would signal to the entire global financial system that the SEC views ADA not as some speculative digital token, but as a commodity-like asset worthy of a mainstream investment vehicle. Now let's connect this future catalyst to the present. It is no coincidence that as these whispers of an ETF get louder, the price is reacting violently. An article from CoinCentral confirms that Cardano has seen a 26% rally, fueled by a massive surge in network activity. A similar report from ainvest.com notes that Cardano has broken a key resistance level and is now eyeing a 29% gain towards $1.20. Do you see the picture here? The smart money isn't waiting for the official announcement. The run-up to the ETF decision is often where the most explosive gains are made. The surge in network activity shows the fundamentals are strengthening, and the technical breakout shows that traders are placing their bets. This isn't just a random pump. It is the market beginning to price in a future where a Cardano ETF is a reality. But as your analyst, it is my duty to inject a heavy dose of realism here. It's not all sunshine and rocket ships. A Cardano ETF is far from a done deal, and there are major risks we need to address. First and most obviously, the SEC could simply say no. Regulatory approval is never guaranteed. The SEC moves slowly and cautiously. There could be legal challenges, political shifts, or concerns about market manipulation that could lead to a denial or an indefinite delay. Pinning all your hopes on a 2025 approval is a high-risk strategy. Timelines in crypto and regulation are notoriously unreliable. Second, even if it gets approved, we have to be extremely wary of a buy the rumors, sell the news event. This is a classic market scenario. The price pumps for months in anticipation of a big event, and then the moment the positive news is officially announced, the price dumps as early investors take profit. We saw this happen to an extent with the Bitcoin ETF launch. Those who buy at the top of the hype right before the announcement could be left holding the bag. Third, let's talk about the competition. The Cryptopolitan article that noted Cardano was rallying to $1.25 also mentioned an ADA rival that was set for 10 times gains. While we're focused on Cardano, we can't ignore the fact that it exists in a cutthroat Layer 1 ecosystem. Projects like Solana, Avalanche, and others are also vying for market share and institutional attention. What if another project gets an ETF first? What if their narrative becomes more compelling to the market in the coming months? An ADA ETF is a bullish narrative, but it's not the only one out there. And finally, the macro risk always applies. If Bitcoin dumps, this entire conversation gets put on hold. A major market downturn driven by macroeconomic factors will crush the altcoin market, regardless of any single project's positive news. However, despite these very real risks, I firmly believe the bulls have a commanding advantage, and the ETF narrative is the most powerful weapon in their arsenal. First, let's rebut the regulatory risk. The hardest part is over. The SEC has already crossed the Rubicon by approving spot ETFs for both Bitcoin and Ethereum. A precedent has been set. The legal arguments have been made and won. This makes the path for subsequent crypto ETFs, especially for a major decentralized project like Cardano, significantly easier. It's no longer a question of if a third crypto ETF will be approved, but when and who. Cardano, with its transparent development and focus on decentralization, is arguably one of the strongest candidates from a regulatory standpoint. Now let's address the sell the news risk. While a short-term correction is possible, the sheer scale of capital an ETF unlocks cannot be overstated. We are talking about long-term sticky capital from pension funds and asset managers. This isn't degen money looking for a quick flip. This is a fundamental repricing of the asset. Any post-approval dip would likely be seen as a massive buying opportunity for institutions that were waiting for the final green light. And what about the competition? Here's where Cardano's fundamental strength shines. The CoinCentral article highlighted a surge in network activity. This is crucial. It means the chain is being used. It has real users, real transactions, and a real growing ecosystem of dApps. An ETF is not being proposed for a ghost chain. It would be a financial product built on top of a verifiably active and robust network. This organic growth provides a solid foundation that makes the speculative ETF narrative that much more powerful and believable. Okay, that's the fundamental clash of titans. But what are the charts telling us right now? Let's pull up the ADA/USD chart on the daily and weekly timeframes. The price action is incredibly constructive. After the recent 26% rally, ADA is currently consolidating its gains, trading around the 0.95 to 0.98 level. This is healthy. It's building a launch pad for the next move higher. Let's map out our key levels. Support levels. First, we have immediate support around $0.92. This is the initial line of defense where buyers are likely to step in on a minor dip. Below that, our most important support zone is the previous resistance level around $0.85. The fact that we broke through this level, as the A-Invest article noted, is technically very significant. It should now act as a strong floor. Our line in the sand support is at $0.75. A break below this would negate the recent bullish breakout and put the bears back in control. Resistance levels. Immediate resistance is a psychological barrier of $1.00. Smashing through this will be a major median sentiment event. Our primary target, as confirmed by multiple sources, is the 1.20 to 1.25 zone. This is a major confluence of technical resistance, and it's the level all traders are watching right now. Beyond that, a major long-term resistance level sits at around $1.60, which was a key peak in the previous market cycle. Now for the moving averages, on the daily chart, the price is holding strong above both the 50-day and 200-day EMAs. The 50-day is sloping upwards aggressively, showing powerful short-term momentum. More importantly, that weekly golden cross we talked about before is still in play, providing a massive tailwind for the long-term trend. Finally, the chart pattern is screaming bullish continuation. We have a clear breakout from a consolidation range, and now we are forming what appears to be a bull flag or a high tight pennant on the daily chart. These are classic continuation patterns that form after a strong upward move. They represent a brief pause where the market catches its breath before launching into the next leg up. The measured move out of this pattern targets, you guessed it, that 1.20 to 1.25 area. So to bring it all together, we have the absolutely game-changing catalyst of a potential spot ETF, which is the ultimate bullish narrative. We have to be cautious of the regulatory timeline and the classic sell the news risk. However, the charts have decisively broken key resistance, are holding above key moving averages, and are forming a textbook bull flag pattern that is pointing directly to higher prices. Given this confluence of factors, here is my data-driven price prediction for Cardano. My conservative short-term target for the next 1 to 2 weeks is $1.22. I believe the energy building in this bull flag is more than enough to propel us through the 1.00 psychological barrier and hit the technical target that multiple analysts are watching. Now, for my ambitious moonshot target for the next 3 to 6 months, factoring in the growing hype and front-running of the ETF news, if the narrative around a 2025 approval continues to build, we are not going to stop at $1.25. The run-up will be immense as capital floods in to get ahead of the official decision. Therefore, my ambitious target for the next 3 to 6 months is $2.85. This would see us reclaim a significant portion of the previous all-time high territory, driven by the single biggest legitimizing event in Cardano's history. This is the moment the Cardano community has been waiting for. The technology is mature, the network is active, and now the ultimate catalyst is on the horizon. Now it's your turn. Do you believe a Cardano ETF will be approved in 2025? And what price do you think that news could send ADA to? Drop your thoughts in the comments below. I read every single one. And that's a wrap. If you learned something today, do your part and destroy that like button. Don't forget to like, subscribe, and hit that notification bell so you don't miss our next deep dive. The market is heating up and we'll be here to guide you through it every step of the way. This is Daily Crypto Market signing off.